Thank you for your interest in Asheville Habitat's affordable homeownership program for first-time homebuyers. This virtual information session will guide you through an overview of our program and criteria. By the end of this video, you should feel informed on what our program entails, what it takes to qualify, and how to apply. First, let's talk about what we do at Habitat. Habitat for Humanity International is a global organization and network of local affiliates with a mission statement seeking to put God's love into action. Habitat brings people together to build homes, communities, and hope. Asheville Area Habitat for Humanity was founded in 1983, becoming the first Habitat affiliate in North Carolina. As your local Habitat affiliate, we follow in the mission of Habitat International, working to make it possible for people to access safe, decent, and affordable housing. Since its founding, Asheville Habitat has completed more than 378 new homes. There are a lot of myths and misconceptions about what we do and who we serve at Habitat, including Habitat gives houses away, you can never sell your house, you have to be a Christian to become a Habitat homeowner, or you have to have children to be a Habitat homeowner. None of these myths are true. In fact, all applicants are welcome regardless of race, religion, sexual orientation, or family makeup. We are not a social service, whether we are a nonprofit builder, an equal opportunity mortgage lender, working to increase access to affordable housing in Western North Carolina. We want more people to be able to enjoy the stability and opportunity that comes along with homeownership. Habitat builds homes in Buncombe and Madison County, and we also build a variety of homes. And those homes include 2-story, 2- and 3-bedroom townhomes, 1-story and 1- and 2-bedroom townhomes, single-family homes for larger families, and we also have aging-in-place units built with the universal design features to assist homeowners as they age. If you are 55 or older, visit the Aging-in-Place page under the Homeownership tab to learn more. Regardless of the type, each home is going to include a stove, a refrigerator, a dishwasher, a garbage disposal, central heat and air, smoke alarms, and an option to purchase an energy-efficient washer and dryer through Habitat, financed at 0% interest and is included in your mortgage payment. All appliances are electric powered, and all homes are Green Belt North Carolina certified. Heating and cooling costs in your energy-efficient Habitat home are guaranteed not to exceed more than $55 a month for the first 2 years. Since heating and cooling make up the bulk of your electric bill, homeowners typically see a significant savings. Outside, regardless of the type of home, you will have a driveway, landscaping, a utility shed, which will also include a lawnmower and gas can. Here are some images from inside of our actual Habitat homes. We build modest, affordable homes. While they are not huge, they are well built, affordable, and if approved, the home will be yours. Can you picture yourself in one of these homes or your belongings in one of these rooms? We are continuously building new homes, most often in subdivision-style neighborhoods and sometimes on individual lots. It is extremely important to know that when you apply for homeownership through Asheville Habitat, you are applying for the program, not a particular location. If approved, you will have the opportunity to purchase the next available Habitat home that fits your household size and accessibility needs. Asheville Habitat cannot guarantee that you will be placed in a particular home or neighborhood. All Habitat homes are sold with an affordable 30-year mortgage, meaning a monthly payment including taxes, homeowners insurance, and HOA fees will not consume more than 30% of the buyer's gross monthly income. Now that you know more about what we do at Habitat, it's time to learn what it takes to become a Habitat homeowner. We look at 3 main criteria to qualify applicants for our program. Our criteria are designed to be fair, objective, attainable, and also complying with mortgage lending laws. Our 3 main criteria are need for housing, ability to pay, and willingness to partner. To preview some of our more specific qualifications, Habitat homeowners have to be considered low income but still have the ability to pay a mortgage. Qualified applicants will have stable income, rental history, and will be willing to complete volunteer hours with Habitat. When you apply, you are applying to be pre-qualified for a mortgage loan, and you are applying for Habitat's program. After closing, you will be a homeowner with the ability to build equity. This is only a short summary, so let's go ahead and get into the details. The first criteria that must be met by all eligible applicants is the need for housing. Qualifying examples for need for housing includes living in a home that is overcrowded, living in substandard conditions, unhealthy conditions, or unsafe conditions. Need for housing may also include living in transitional housing, subsidized housing, or public housing. Finally, if you are cost burdened, meaning that more than 30% of your monthly gross income is going to rent, that will also be a valid need for housing. When completing your application, please be specific in providing your need for housing. The next criteria that must be met is ability to pay. Like any lender, Habitat must verify your ability to repay the mortgage. Qualified applicants must have consistent income, whether that is from employment, Social Security, SSI, disability, retirement funds, or a combination of income sources. To be considered countable, the income must be stable, verifiable, and likely to continue for at least 3 years by mortgage lending standards. When considering income from employment, the likeliness to continue is determined by the employment history, which we will discuss shortly. We require proof of income and cannot process your application without income documentation. Before we move on to specific income requirements, please note that we do look at all income sources for the household. Please keep in mind that married couples are required to be co-applicants even if they are legally separated. Otherwise, whether you have a co-applicant is up to you. All homes are required to be owner-occupied for the life of the mortgage. There are no co-signers, co-applicants, or co-owning household members. So here's our income requirements. Our income limits reflect the balance between mortgage lending standards and our mission to serve low-income families and individuals who may be unable to buy on a traditional market. To qualify, your income must fall between 40% and 80% of the area median income, or AMI, for your household size. So if you find your number of household members in the left-hand column, you can move to the right to see the related minimum and maximum monthly gross income. We look at all income sources pre-tax. This is your gross monthly income before taxes. The applicant and co-applicant's total monthly income must fall into the range shown. To be considered low income, total household income cannot exceed 80% of the AMI. When we receive your application, one of the first things we do is calculate your household income according to the Pacific income calculations. Without income documentation, your application is incomplete and we will not be able to evaluate it until we receive the following documentation. For income from employment, we require 2 months of current pay stubs. If you are self-employed, we require 2 years of your most recent tax returns with an annual profit and loss statement. For Social Security income or other federal benefits, we require a copy of your current benefit letter. If you receive a monthly retirement distribution, we also require a copy of your monthly distribution statement. Finally, if you receive child support or alimony, it is your choice whether to disclose income, but keep in mind it can only help you. If you do receive child support or alimony and would like it to be included in your income calculation, you must submit a 12-month printout of payments received from child support enforcement or provide bank statements showing those direct deposits into your account. Now that you know how to document your income with your application, let's take a look inside at how your income is calculated. When we receive your application and income documentation, we will look at all income sources and categorize them as applicant income or household income. Applicant income is any income source that belongs to the applicant or co-applicant, and if that income source is from employment, it must also meet the employment history criteria, which we will discuss shortly. All income sources in a household that do not meet this criteria will be counted as household income. Household income is just as it sounds. It's the income of other household members or income that cannot be counted towards the mortgage payment. The total applicant and household income cannot exceed the maximum of 80% AMI income level shown previously, and the applicant income alone must meet the minimum 40% AMI income level. In short, while we count all income sources in a household, the income that is used to meet the minimum income requirement must be verifiable, stable, and belong to the person legally responsible for that loan. Some income sources may be exempt from being included in your household income calculation, such as income earned by a full-time student and some types of adoption or foster income. However, you must report all income sources so we can make that determination. It is okay if you're not sure exactly how your income will be calculated. If you fill in all the requested information on your application and provide required documentation for income, we will figure it out for you. To determine your ability to pay, we look at a few more specific criteria driven from mortgage lending laws and protocols for affordable housing providers. Our employment history criteria state if your income comes from employment, you are required to have 2 years of steady employment history, including at least 12 months with your current employer. This is a benchmark for determining that your income is likely to continue and is a standard mortgage lending practice. If you are self-employed, we still require that you have self-employed in the industry for at least 2 years. This is especially important as income from self-employment can see greater fluctuations throughout the year and will be calculated from an average of your earnings as reported on your last 2 tax returns. Next, we require 12 months of successful rental history with payments that are consistently on time. Homeownership is largely responsible. Having verifiable rental history serves as proof that you are prepared to manage a monthly housing payment. To verify your rental history, we request a copy of your lease and will verify with your landlord or property manager that you have had no more than 2 late payments in the last 12 months. If you have an informal rental situation where your name is not on the lease, such as a sublet or rental from friends or family, we will require 12 months of canceled rental checks or proof of electronic payments as verification of your rental history. If you do not or have not lived in the same place for the last 12 months, you just need to have made on-time verifiable housing payments for the last 12 months. If for whatever reason you do not pay rent, you can also meet this requirement by keeping a savings. In lieu of verifiable of rental history, applicants must submit proof of monthly deposits equal to 25% of their monthly gross income into a savings account over the course of 12 months. Like rent, the money must remain in the savings account until the applicant closes on their home, and deposits must be made at the same time each month, but no more than 2 30-day late deposits in a 12-month period. Next, we're going to talk about credit requirements and delinquent debt. So when we talk about delinquent debt, we allow up to $3,000 in non-medical collection. This includes collections, charge-offs, late payments, and for delinquent balances. Next, we have our medical collections as well, which are counted separately. We allow up to $10,000 in total medical collections based on the age of the debt. Total balances for medical collections less than 3 years old cannot exceed $2,500, and total balances for medical collections more than 3 years cannot exceed $7,500. Finally, any liens or judgments on your report must be settled or released. Keep in mind, the income and credit criteria are the same whether applying alone or with the co-applicant. In other words, if you have a co-applicant, we will pull your joint credit report both for you and the co-owner for credit history, and current balances will be counted against our maximum credit criteria. The maximum amount will not double. It will be the same whether there is 1 or 2 applicants. You will also notice that we have since, if you are applying and worried about repossessions, if you have a repossession that is 4 years or less prior to application, we will be counting that in your delinquent debt collection. If that repossession is over 4 years old, we exclude it from the collection total. Okay, next we're going to have credit requirements for non-delinquent debt. For non-delinquent debt, this is for revolving debt, meaning credit card debt. You must have no more than $5,000 in total for credit card balance. Next, we are going to be looking at debt to income ratio. As far as debt from installment, auto loans, student loans, the balance is not as important as the monthly payment. Your debt to income ratio is currently monthly debt in relation to your current monthly income. We want to make sure that you have enough to assume a monthly mortgage payment after you pay your other monthly debts. To meet our debt to income criteria, your current monthly debts, meaning the sum of your monthly minimum credit card payments, installment, and student loan payments, if you have them, cannot consume more than 18% of your gross monthly applicant income. If your student loans are deferred or if the monthly payment shown on your credit report is zero, we are required to count 0.5% of the total balances in the debt to the income calculation as your monthly payment. Finally, if you have filed bankruptcy, you must wait 2 years after your discharge date to apply. We will also verify that you are a first-time homeowner. This does not necessarily mean that you have never owned a home. Specifically, it means that your name hasn't been on a deed for a home in the past 3 years and that your name has never been on a deed of an Asheville area habitat home. We also look at residency and background checks. Our background check policy is a point-based system designed to be fair, objective, ensuring a safe neighborhood without punishing applicants for minor or past offenses. If you have worked hard to move beyond past offenses, do not be discouraged from applying. Sex offenders are the only automatic decline. All applicants must be U.S. citizens or legal permanent U.S. residents, which we verify by birth certificates, certificate of nationalization, or unexpired green cards. Additionally, applicants must have lived or worked in our service area for at least 12 months prior to applying, and our service areas is Buncombe and Madison County. The region is currently facing a housing crisis, in part due to the influx of people moving to the area. We work to serve those in our community who are struggling under the housing crisis, rather than contribute to the issue. As a result, we cannot serve people looking to move to the area. Even if you have lived here in years past, applicants also need to be a local resident and able to complete the application process and willingness to partner requirements. Okay, before we move on to our willingness to partner requirements, let's take a breath. You have just learned about the bulk of our qualifying requirement. It seems like a lot, but we are here to guide you through the process. While we will require documentation for all of the things mentioned previously, employment history, rental history, and so on, you don't have to worry about that just yet. The only thing we need to get started is your complete application. Make sure you sign everything and provide all the information requested and your income documentation that will be discussed during the income requirements section. Again, the application form and your income documentation together compromise your initial completed application. Please make sure that your income documentation is current. Remember, you are applying for a mortgage loan, so we cannot process applications without sufficient proof of income. If the information in your initial application meets our criteria, we will send you a documentation packet with detailed instructions. That will let you know exactly what else we need to verify your information and move forward in the process. To get started, we just need your completed signed application with sufficient income documentation. While we guide you through the process, don't forget that we collect documentation throughout the application process and we verify all documentation. Please be thorough and complete your initial application. If you feel that the situation does not fit into the boxes on the application, go ahead and provide additional context or documentation as needed. We are required to report mortgage fraud. That is fraud for housing, including falsifying information on your application, misrepresenting the number of household members, reporting incomplete or false information, and failing to disclose income or overstating income. If you omit or misrepresent information, it will become known later in the verification process and will not only waste time and resources, but could also be considered mortgage fraud. All right, now that we have took a deep breath, now let's look at our final criteria, willingness to partner. Willingness to partner includes being a willing participant in the application process, participating in some program publicity, and being respectful to staff and volunteers. But the biggest piece of the willingness to partner requirement is the completion of what we call sweat equity. Habitat homeowners are required to complete sweat equity volunteer hours before closing on their home. 200 sweat equity hours are applied to each applicant, and 25 hours will be added for each household members ages 16 or older. While we do not allow proxies, the required sweat equity can be divided among eligible household members however you like. Sweat equity hours includes volunteering on a construction site, volunteering in a restore, or other occasional volunteer opportunities, and attended homebuyer education classes that will teach you about your mortgage structure, personal finances, and home maintenance. We also require at least 50 of your assigned hours to be completed on the construction site, as volunteer labor is essential to allowing us to provide homes which are affordable. That said, if you are unable to do physical labor, don't be discouraged. We will absolutely work with you to find other ways for you to complete these hours. Our partner with Habitat is a commitment. The homeowner services team will always work with you to come up with a plan to complete the hours before closing in a way that works for your schedule and ability. In general, the sweat equity process takes 6 to 8 months, and hours must be completed before you will be able to close on your home. This is just not a hoop for home buyers to jump through. This is an essential piece of what makes Habitat's work possible. Instead of paying monetary down payment, Habitat homebuyers invest their time and energy into the sweat equity process. While it is certainly a commitment, it is designed to help buyers become successful homeowners. Most homeowners feel empowered by the fact that they had a hand in building their home and enjoy getting to work side by side with their future neighbors and with volunteers who want to see them be successful in homeownership. Finally, please note, only volunteer hours completed by board-approved homebuyers in the process will be counted towards sweat equity. If you plan to volunteer before applying, it will not count towards your sweat equity hours. Now that you are well informed about our requirements, let's take a look at the application process. Asheville Habitat ability to accept applications depends on availability, so check our website for the latest information on our capacity to accept applications. Depending on availability, the application process can take several months to complete. The first step will be to submit a completed form of application with sufficient income documentation for all household members. If your application itself is incomplete or does not include the required income documentation, we will not be able to evaluate your application. Once we receive your application with income documentation, we'll evaluate the initial application and respond with a letter within 30 days. If you receive a decline, we will give you as much information as possible to explain why and give you helpful information for you if you would like to reapply. There's no limit on the number of times you are able to reapply, and many of our current homeowners applied more than once before being approved. While our criteria is specific, we have led more than 378 applicants to homeownership. If your initial application fits our criteria, a documentation packet will be mailed to you detailing the next step in the application process as described in the ability to pay section of this video. Once all of your information has been verified, an application review session will be scheduled to go over all your documentation and discuss your obligations moving forward, and will be taken on to a site visit to see a Habitat home in the neighborhood firsthand. Then we will send your application to our homeowner loan committee and to our board of directors for their final approval. At this point, we will schedule your orientation and sign your letter of acceptance. Once you're board approved, everything you do with the Habitat will be counted as your sweat equity. Overall, from the time of submitting the initial application to closing on your home, typically takes 1 year to a year and a half. Thank you for your interest in Asheville Habitat's Affordable Homeownership Program. We hope this information session has left you feeling informed on the program and what it takes to qualify and how to apply. As mentioned earlier, we do look for mortgage fraud. Mortgage fraud is a crime punishable by healthy fines and jail time. Providing false financial information on the mortgage loan application, providing false information regarding household members, using nominees for the purchase of property, falsifying documents such as tax returns, or failing to disclose material information are all grounds for mortgage fraud. Anyone who attempts mortgage fraud will be declined immediately and reported to the proper officials for the offense. Asheville Area Habitat for Humanity is also an equal opportunity housing provider. We are pledged to the letter in the spirit of the U.S. policy for the achievement of equal housing opportunity throughout the nation. We encourage and support affirmative advertising and marketing programs in which there are no barriers to obtaining housing because of race, color, religion, sex, handicap, familial status, or national origin. Thank you so much for your time in attending our information session virtually. If you are wondering, should I apply? Yes, give it a try. And remember, we are here to guide you through the process. So if you have any questions, please give us a phone call at 828-210-9371. And then you can also send us an email at apply@ashevillehabitat.org. Thank you and have a great day.